Members of the media, welcome to the 124th press briefing of the Monetary Policy Committee of the Bank of Ghana. We are also live on the Bank of Ghana website and also on LinkedIn and on Facebook. So we'll just go straight ahead and listen to the chairman of the Monetary Policy Committee, Governor Dr. Johnson Pandit Esiama. Thank you.
Briefing of the Monetary Policy Committee following the regular meetings which evaluated current economic developments and assessed the risks to the inflation and growth outlook. This briefing is meant to share with the press a summary of the key discussions and decision on the monetary policy stance as part of our commitment to transparency and accountability. Global economic developments in the first 4 months of this year were characterized by low growth prospects, unsynchronized disinflation outcomes, and restrictive global financial conditions driven largely by significant wins with the policy shifts in the United States. The potential spillover effects of the imposition of the trade tariffs by the United States and counter-tariff measures have heightened policy uncertainty, weakened investor sentiments, and lowered global growth prospects. In the actions by central banks have been made, reflecting divergence in inflation outcomes. While some countries said tighter for longer stance, others have cut policies, citing a gradual ease in inflation towards central bank targets. On the domestic front, the bank's high-frequency real sector indicators point economic. The updated index of economic activity increased by 2.3% year-on-year in March 2025, compared with 1.0% over the the 50 benchmark as output and new orders increased, signaling improved growth prospects. Based on easing inflationary pressures and optimism about macroeconomic conditions, the latest confidence surveys showed significant improvement in consumer and business indices, the highest in the last 7 years. Headline inflation has declined consecutively in the first 4 months of the year by 2.6 percentage points to 21.2% in April 2025, and this was driven by both food and non-food inflation. A confluence of factors, including tight monetary policy stance, stepped up liquidity sterilization efforts, downward revisions in ex-pump petroleum prices, and exchange rate stability have supported the gradual decline in inflation. The bank's core inflation measure, which includes energy and utility prices, as well as inflation expectations of consumers, businesses, and the banking sector, point to easing inflationary pressures. Fiscal policy implementation so far has been broadly aligned with the 2025 budget. In the first quarter of 2025, provisional data on budget execution indicated that although revenues fell below target, some expenditure rationalization took place to accommodate the revenue shortfall. The primary fiscal balance, and that is on commitment basis, has also improved in the first quarter. At the end of March 2025, the stock of public debt stood at 769.4 billion Ghana cedis, which constituted 55.0% of GDP, compared with 726.7 billion Ghana cedis, which constituted 61.8% of GDP at end December 2024. Continued maintenance of a strict fiscal consolidation for the 2025 fiscal year will further strengthen the ongoing recovery process and firm up macroeconomic stability. On the external sector, the sector has continued to improve, with a record provisional current account surplus of 2.1 billion in the first quarter of 2025, and this was driven mainly by higher prices and increased production volumes of gold and cocoa and strong remittance inflows. The current account surplus, together with net outflows in the capital and financial account, resulted in an overall balance of payments surplus of $1.1 billion. The strong external performance resulted in significant reserve accumulation. Gross international reserves amounted to $10.7 billion in April 2025, and this was equivalent to 4.7 months of imports of goods and services. Broadly, the external sector outlook remains favorable, largely anchored on expectations of increased gold and cocoa export receipts, as well as inflows from remittances. On the local currency, the cedi has rebounded strongly against the major trading currencies, and this was driven by a combination of factors. And this includes tight monetary policy stance, ongoing fiscal consolidation, record reserve accumulation, strict enforcement of foreign exchange market rules, and improved market sentiments. In the year to May 21st, 2025, the cedi had appreciated against all the major currencies, and that was 24.1% against the US dollar, 16.2% against the British pound, and 14.1% against the euro. The latest forecast points to continued easing of inflationary pressures on the back of tight monetary policy stance, exchange rate stability, and fiscal consolidation. Inflation is expected to ease faster towards the medium-term target in the first quarter of next year, that is 2026, as opposed to the second quarter as earlier envisaged, and this is barring unanticipated shocks. Despite these positive developments, the committee observed that the current level of inflation remains high relative to the medium-term target and will require maintaining the tight stance to reinforce the disinflation process. Under the circumstances, the committee by a unanimous decision, maintained the policy rate at 28.0%. On the additional policy measure that was taken by the committee decided to amend the dynamic cash reserve ratio that exists currently as follows. The CRR, or the dynamic cash reserve ratio, for all banks will now be maintained in their respective currencies. This means that foreign currency reserves for foreign currency deposits, and the same way domestic currency reserves for domestic currency deposits. This policy measure will become effective on June 5, 2025. For an informational note, the next Monetary Policy Committee meeting is scheduled to start on Wednesday, July 21st, 2025, and will conclude on Friday, July 2025, with the announcement of the policy decision, the next by the Monetary Policy Committee. I thank you very much.
Thank you, Governor Dr. Esiama. As we always do, we go around and take questions from you. But before that, let me say that the submissions of members of the MPC will be published on Tuesday, May 27th. I would also want to inform you that we have all the MPC members here at this meeting. And I'll just introduce our two external members, Professor Joshua Abo and Professor Bobo Essie. We also have with us in this meeting the advisors of Bank of Ghana. So we'll have the first round of questions, and not more than 4 questions. Kindly mention your name and the media house that you represent. Make your questions snappy and straight to the point.
Thank you very much, Governor. My name is Lord Nati. I write for 3news.com. Now, Governor, my question has to do with the appreciation of the cedi. Now, we've all seen the numbers, and we can attest to the fact that the cedi is gaining stability. But now the issue is that consumers are expecting to see the stability reflect on the market and in terms of prices. And we do know that as the Bank of Ghana, one of your core functions is to ensure price stability, to formulate policies to ensure price stability. So now the key question is that when are we going to see the drop or the appreciation of the cedi reflect on the market in terms of prices? Thank you.
Yes, Toma.
My name is Toma Emiri from the Corporate Guardian magazine. Governor, please, what is your tentative target for building our foreign international reserves? Now we're over 10 billion. Is there any target you have beyond which you will not be seeking to increase reserves, but using the forex for other things like buffers against debt repayments, which are falling due from June?
Thank you, Toma. Justice.
Thank you very much. The name is Justice Lee Adoboy. I report for the Shinwa News Agency. Now, so my question is in line with, similar to what Toma asked. So for where we are now, we know that in about some 18 months, we would have to begin to service some of our debt. So what are we doing such that, what are measures that we put in place such that our reserves at the time we start this will not be too much, so that we can still maintain our stability when it comes to our reserves? Thank you.
Good afternoon. My name is Naja Gliago with GBC Radio. Mine is a follow-up to what Lord Nati of 3 News asked. aside from what consumers are expecting out there, one other question that people have been talking about has to do with sustainability, so far as the appreciation of the city is concerned. Governor, how sustainable is this appreciation process going to be? Providing the measures you've taken so far, are there other measures that you have in your books that you haven't introduced yet, that you'll be bringing it out? Should we see some changes going forward? Thank you.
Thank you very much, Na. And on that note, I defer to Mr. Governor. Thank you.
So this one first. Appreciation of the city. When can this reflect in prices? Usually, price behavior, it tends to be sluggish, and you can understand that some people stock their goods at a higher exchange rate. And so naturally, even with the appreciation, it takes a while, for you to see that adjustment. However, rest assured, you will see the adjustment certainly. So long as there's competition, so long as it's not a monopoly, we will see that kind of phenomenon very soon. Second one, what is the tentative target from our NIR? So if talking about a target, it's rather a floor. Usually the 3 months of imports cover, that is by way of target that we monitor. It's desirable that you have a minimum 3 months of imports cover at all times. Currently, we are way above that. Is it excessive? Not at the moment. What we have now is just adequate. It's more than adequate. It's just, at levels that we are comfortable with. It ensures our external resilience. It ensures that even if in the future we have any shocks confronting the country, we are able to act. We will have the necessary tools to protect the economy. And so we don't have an upper target per se. What we have is a lower, a sort of floor below which it won't be desirable to have your international reserves fall. Then the next one by Mr. Adobwe. You are worried about whether we have enough to pay our debts. So you must remember that we are already paying those debts. It's not going to start only in the next 18 months. We are already paying our debts. And what we do is that we have a cash flow. We have a sense of accrue going into the medium term. We have these programmed, and it is something we monitor. And so have no fears at all. We have it all figured up. It's not only the debt repayments that will come up. We have dividend payments. We have, all sorts of international payments that have to be executed. And we have all of them programmed. And we think that the level of international reserves we have now is pretty adequate. Then there was the fourth one on whether we can sustain the cedi appreciation. So the cedi appreciation has to be put into proper context. Much as you want to have cedi stability in nominal terms, the important thing here is to ensure that in real terms, the cedi is not appreciating persistently in real terms. And so the committee, and that is the MPC, they went into a lot of deliberation looking at the real movement of the exchange rate. And we think that where we are now, we don't have that problem of real appreciation that will impact adversely on our competitiveness. And so for now, we think that the trend is in line. We are observing it continuously though. But the appreciation is largely driven by the market. It's not something that the central bank is using its reserves. If you look at the data pack that we have put out, it was put out yesterday on our website. You can see that our reserve program is growing, is going up. So we are not using our reserves to intervene in the market, and therefore the appreciation you are seeing is driven by our economic policy, the stance of monetary policy, is driven by the international flows, that remittances, cocoa, gold, and the likes. If you look at the external sector performance, the current account is in surplus, trade balance is doing so well. These are the factors that are driving movement in the exchange rate. So yes, it's appreciation. However, for us, it's about maintaining exchange rate stability. Remember, the exchange rate is an endogenous variable, as we always say. It has to fluctuate, right? And what we have is a managed floating regime. It has to move. So you may see it go down, you may see it go up. The important thing is that the swings are not excessive. So that is how we look at it for now. It is in our interest to ensure exchange rate stability going forward. However, that does not mean that we have a target. That does not mean that we're going to have an appreciation in real terms that will be persistent, which could be injurious for our competitiveness at all. So I think these are the 4 questions I've picked up so far. Right.
Thank you very much, Chairman Governor. Before we take the next round of questions, I would like to introduce to you formally Mrs. Matilda Asante-Siedu, and our second Deputy Governor. This is her first Mpc Press Briefing, and at the March Press Park, you saw that space was blank. And we filled it, and no one asked questions. I thought that was going to be the first question. So, Mrs. Matilda Asante-Siedu, this is the media that you'll be working with, and most welcome to the May MPC meeting, and also as the second Deputy Governor of the Bank of Ghana. Thank you. So we go round for the next round of questions, as usual, straight with brevity, 4 questions, and we move on. Thank you.
Hi. Okay. Hi. Good evening, Governor. Welcome, Second Deputy Governor of the Bank of Ghana, Mrs. Matilda Asante-Siedu. Good to see you. Mr. Governor, you mentioned that you don't really have a target for...
Sorry, kindly mention your name.
Oh, sorry. My name is Nano Yankra. I report for Asasi Radio. You mentioned that you don't really have a target for the city, but the first half of the year will be ending very soon. And so I want to believe that as a bank, you will at least look at a figure. The movement of the city has now turned most Ghanaians into economists, and some are predicting that we are going to go below 10 cedis by the end of June. So I want to ask you, is there a figure you are looking at by end of June this year?
Okay, we'll take a few more.
My name is Norvan Akwahifort. I write for Norvan Report. Mr. Governor, given the current tight monetary stance, how is the bank assessing the trade-off between price stability and the private sector credit growth, especially when the real sector remains, or the real sector, I would say, recovery remains fragile and access to credit is constrained?
Hello. Yeah. My name is George Yaffe from Joy FM. Doc, I just want to find out, I don't know which of the data the committee looked at when it came to the bit about the inflation bit, but some have argued that looking at the way things are going, utility tariffs maybe could go down, transport fares are going to go down by 15%. There are some who have argued that looking at the way things are going, it is likely that we may hit a single-digit target even before the close of this year. What is the committee saying about this as well? And also, I wanted to find out from you, if you go through the data pack, you realize that the debt stock had really jumped from December, ramping up to March. What was the reason? Was it the CD or was it the Treasury bills borrowing or what? Just some clarity on that. Thank you so much.
Hi, Governor. My name is Neil Lati, CTFM Channel 1 TV. I'm quite interested in knowing what the bank's plans are when it comes to charges from mobile money, account to bank account and vice versa. One would have expected that when the e-levy was removed, some of these things will be catered for. I'm asking because you realize that between March and April, when the e-levy was removed, total deposits at banks have actually reduced from 294 billion to some 289 billion. In the bank's own assessment, what is accounting for this, and what is the bank's plan when it comes to charges between mobile money wallets, bank accounts, and vice versa? Thank you.
Okay. So my name is Adnan Adams. My first question.
Sorry,
ties
can you?
it ties to the e-levy, the transactions, the bank transactions charges. So it just ties through. So I just want to. Okay. All right. Economic Times.
Okay.
All right. The Ghana Association of Bankers, is predicting that e-levy may be reintroduced. Looking at the volume of digital money transfers that's currently ongoing globally. So from policy perspective, and then as the regulator also of these banks, commercial banks, would you also kind of maybe give us some insight into as to whether if we should expect reintroduction of e-levy? Then secondly, just to also on the good for reserves issue, and then the good for oil. Just wanted to know how the good for oil really impacted the current good for reserves or the CD performance as we are seeing. Thank you.
So again, if I can start with the question from Asasi Radio. Is there any figure for the CD, right? By end June, whether we have a target? No, we don't have a target. And I just explained it. I explained it that the CD is an endogenous variable, right? And as much as we don't want it to be, depreciating excessively, we don't keep a target to which we expect it to get to. We are aware of speculations out there. People are mentioning all manner of figures. But you see that you haven't heard any such target that is communicated by the central bank. No. All we can say is we will ensure that volatilities are not excessive. We are observing trends in the nominal movements of the CD. Remember, it goes hand in hand with the rate of inflation. And so I made mention of the word real exchange rate or real effective exchange rate. That is what is important in this whole game. That is where our focus is. The committee, looked into the movements in the real effective exchange rate. And as at now, where we are now, we don't think that there is a persistent real appreciation that will be causing us problems in terms of competitiveness. And so rest assured, where we are now, we are observing things. However, we haven't gotten to that stage. When we get to that stage, the committee will take the appropriate decision. Then there was a question about price stability and private sector credit growth. I do not get it, too clear. But I want to believe you want to understand our role when it comes to price stability and private sector credit growth. Yes, price stability is part of our mandate, and we look at that very, very judiciously. The committee did a lot of deliberation in that area. Remember, we look at the outlook for inflation, and we think that where we are now, we are on course to attain our outlook, end of year outlook. We are looking at around 12%. We think that we are on course to meet that, and by the end of the first quarter next year, we believe that we should be able to get back into our target band. I hope you are aware of our target band, 8 plus or minus 2%. That's what we are working towards. We believe that we can attain that target band even before the timeline we gave at the last MPC round. Now, the committee looked at the issue of private sector credit, as well. It is recovering. Growth is quite strong. And one of the things that we were happy to look at was the reference rate, which is computed by the Ghana Association of Banks. You will notice, and I believe it's in the data pack somewhere, you observe that the measure of their reference rate has come down significantly. It is in our interest to ensure that the lending rates, in Ghana do come down. And so going forward, we expect to see some movement, some decline in the lending rate. That is a key way to support the private sector. And of course, trends in the local currency will also support private sector growth and therefore overall growth in the economy. So rest assured, we are on course. We believe that there will be a rebound, strong rebound for the private sector as the macroeconomic stability becomes entrenched. And then there was a question on inflation for end December, right? It's around 12%. We are looking at around 12%, actually around 11.9%, roughly 12%. Then there was a question on debt, on our debt stock. George, would you be able to repeat the question?
Governor, I was saying that if you look at from December, end of December to March, there was a spike, I think if my numbers were right, about 42.7 billion cedis. And I was just asking that what was the contributing factor when overall we thought that government was not borrowing, just even though through the treasury bill market. And so
This is total debt stock,
yes,
or
please.
Domestic debt stock?
Total debt stock.
Right.
Yeah.
Okay. So that you are quoting the figure from the
End
data
December
pack?
to end March, please.
Right. We could refer to the data pack to see what you are referring to. But these are figures from the fiscal authorities. These are figures computed by the Ministry of Finance. However, we could have a one-on-one on that conversation. I want to be specific, so let's have a one-on-one on that after the press conference. Then there was something about digital money transfer, introduction of e-levy. Again, it's the fiscal authorities that handle that. So Ministry of Finance is best placed to answer questions about e-levy. Although we do, expect that the removal of e-levy will support, the innovation, it will support financial inclusion. It's a positive move to do something about e-levy, and we support that measure. Then you also mentioned the Gold for Oil program, which was implemented some time ago. You remember that at the last MPC press briefing, I made the point that we were reviewing our participation in the Gold for Oil program. Yes, indeed, we have reviewed that. The Ministry of Energy has set up a committee to look at the way forward as far as the Gold for Oil program is concerned. That committee is yet to come out with their findings, And so for now, what I can tell you is that the Goal for All program, as far as our participation was concerned, has been reviewed. However, the form and going forward that it will take will be communicated by the Minister of Energy, and I'm sure that will be done very soon. I believe that is all the questions. Did I meet one?
Yes, please. With charges on mobile money accounts, apparently it still persists.
Charges on mobile money accounts.
Transfer between wallets, yes.
Transfers between wallets and
The platform transfer.
It's your question again because I found it a bit
or otherwise,
So simply put, if you are transferring money from your own mobile money wallet to your bank account and vice versa, you are being charged. And I'm asking what the bank's plan is, because if you want to look at financial inclusion, this is actually the service. However, if you look at the data pack, you realize that total deposits between March and April dropped. So I want to find out what the bank's assessment is when it comes to the reason for this drop in total deposit, if that particular issue is also a contributing factor.
Okay. Well, it's something that came to our attention, that some banks were imposing this type of charges. We are looking into those. I'm aware of one particular bank where that accusation came up. My director of fintech is not here. I would have asked him to give you the specifics, but that is very much, that is very well noted. If you can let the director of communications know about which particular bank. Do you have of a particular bank? Yes. If you would like to volunteer, you can speak to the head of communications in confidence. We are happy to look into the matter. Okay.
Governor, and as you all know, before we always have a meeting with you post MPC where we take all residual questions. We invite other heads of various departments and they interact with you. So rest assured these issues will be looked at properly. And then also let me say, in line with governor's vision of promoting transparency and accountability process, for this monetary policy committee meeting, we had other institutions and in it. Let's state that kickoff meeting for meetings. And just for emphasis, we had Guta here, and they were allowed as observers to make contributions. Chartered Institute of Bankers were also here. But there was Professor Paul Ale Gid, the Bank of Ghana Chair in Finance and Economics of the University of Ghana. Prof, if you are here, you. Prof, we didn't see the... Right, thank you. So Prof has waved at us. We are all happy. Let's go to the next round of questions, please. And please be straight to the point. Don't add up too much so that it becomes...
All right,
understand what
thank
you
you
want
very
to say.
much,
Thank you.
Governor. Governor, my name is Echo Moses. I report for Bloomberg. Governor, are you not concerned that the rate of the cedi appreciation, albeit positive, is also quite excessive and lends credence to those who are bothered about the volatility of the currency? Are you not concerned about that? And then subsequent to that is what somebody more direct response. Plus would have also helped so that we can use it to do planning. And that's why even that we have an appreciation and we still have like some naysayers, people are still second guessing and, don't want to believe that what is happening is real.
Thank you.
Good afternoon, Governor. My name is Joshua Amlano with the Business and Financial Times. So, in February, the bank published a notice with regards to the auditing of remittances for Q4. I would want to know what's the update with regards to that, given that that has been part of the build-up of the reserves. And also, taking a look at the gold reserve, my second question is, taking a look at the gold reserve that has been accumulated so far, there seems to be a trend, given that usually in the first quarter or in the first few months of the year, few accumulation is done as against latter part of the year. I just want to find out if that would continue this year also, and in conjunction with that, would the bank look at increasing its international reserves via the gold board? Thank you.
Case Leah, sorry, Ghanaian Times. I want the governor's view on the quarterly tariff adjustment and how is it going to affect our ability to achieve our inflation target, end of year inflation target of 12%. Thank you.
I'm Isaac Edu. I am with the High Street Journal. My issue has to do with the end year inflation target. We are currently at 21.2, if I'm not wrong, percent. You are targeting 11.9 by end of year. It is not overambitious. What is the magic wand? Can you show it to us? Thank you.
So on that note, we'll let the governor show you that. Mr. Governor.
The magic wand, we don't have a magic wand as such. But yes, the end of year inflation target or projection is around 12%. So far, when we look at the path, we think that we are very much in line to achieve that target. Remember, what is happening to the local currency, it's also reinforcing the inflation path. The tight monetary policy stance that has been maintained. Remember the last Mpc and the decisions that were taken. And then look at what is happening to non-food inflation, for that matter. Food inflation was a problem at the last Mpc round, but we are encouraged by the measures that the Minister of Finance has indicated in the budget. Assuming those are implemented, inflation moving forward. And we indicated that barring any new shocks, right? So, friendly, barring any new shocks, we are optimistic that we'll be able to achieve that target the year. And for that matter, the medium-term target by the end of the first quarter next year. The tariff adjustment. On the other hand, the utility tariff adjustment rate plays a strong role in the tariffs and their competition. So where you have the local currency appreciating, you can imagine that tariffs will rather, go down. And so we believe we are seeing in the exchange rate, we'll see the same thing by way of lower tariffs, and that should help the disinflation effort going forward. Then there was a question about whether the bank will increase its international reserve. I indicated that in that we are building reserves, continuously. That's the way to strengthen our external resilience. So that exercise will continue. Now, remember, reserves, you are not just talking about gold holdings. You also reserves that we hold. All the F holdings, all the expenses that we have, they are our international reserves. So yes, we'll continue building our reserves program. Then there was a question about gold reserves. It is still on purchase program. The only thing that we have suspended is the gold for oil, program. But all the other programs go running smoothly. Now, there was a question about remittances for Q4. I did that very well. Would the questioner be kind enough to in?
So I wanted to find out. So that was in February 20. That's this year, February. It was announced. It was announced that there's an auditing of the Q4 2024 remittances.
Yes.
For whatever reason, there may be. It's not too clear. So if that has to be, what's the progress with regards to the auditing of that?
Now I get you. That exercise is still on course. We announced it that we were auditing the remittance figures. We have a team that is working on it. Their report is not yet in. So rest assured that exercise is still ongoing. And then there was the first question on whether the CD appreciation is not excessive where we are. So one fact is that expectations play a strong role in movements of the cedi in Ghana. Pricing and in the last probably 2 months or so, extra. Therefore, the flows. Our microphones are behaving like the cedi. We do not think that it is excessive. It is driven by the markets. It is not the central bank that is using its reserves, to engineer the appreciation. It is market driven, right? Strong inflows coming in. We are building reserves. And as I mentioned, we are looking at the real movement in the cedi. And that is what is really important. It is possible that expectations are being, re-anchored, etc. It is a fact that many Ghanaians love to keep their wealth in the US dollar, right? And so it may be an interplay of all these. That's why you are seeing it. We are observing things, we are monitoring things, we are assessing the situation. And don't forget that the movements in the cedi or the appreciation in the cedi is also driving, the disinflation path. So there are positives that are associated with it. But on balance, we are taking a good look at it. We are monitoring it. The Mpc also looked into it. And if we need to, if we need to alter the movement, if we need to intervene, if we need to reconsider anything, the Monetary Policy Committee is ready to engage. But from where we are now, we believe that both in nominal terms and in real terms, the movements in the cedi can be contained. Those are consistent with the macro fundamentals. So that ends the first.
Yes, that ends the
second
round of questions. So we'll be going to the last round. But before that, let me welcome those who have just joined us. This is the 124th press briefing by the chairman of the Monetary Policy Committee, Chairman Governor Dr. Johnson Pandit Esiama. The policy rate has just been maintained at 28%. So we move to the last round of questions, and as usual, with brevity and clarity, we'll take the last 4 questions. Please don't pad it, just straight to the point. What is this? And so on and so forth. Thank you.
Governor, during the 123rd MPC press briefing, I remember asking about the issues surrounding Societe Generale, and on that particular day, you mentioned that the sale was ongoing. Governor, today I want you to update us on the issues surrounding Societe Generale.
Thank you very much, Governor. So, my second question is about the Ghana's debt, how to deal with the debt. And some analysts have been saying that there are other avenues on the global market that Ghana could take advantage of. And one specific avenue they mentioned was Islamic financing, which has to do mostly with not taking interest, but sharing, dividends, etc. So they're asking how long would it take Ghana to be able to access Islamic financing because other countries are taking advantage of it.
Adams, Economic Times. Just on the Islamic finance aspect, since Prof. John Gachi is also now advisor to the bank, and he has been an ardent advocate for Islamic finance, and there have been several attempts for the starting or the startup or the introduction, but the framework seems to be the challenge. So we also want to find out how the Bank of Ghana will help in terms of coming out with the framework, because there are a lot of players who are ready to establish Islamic finance institution in Ghana. At the last MPC press briefing, I did ask of the annual reports when it could be released, and we were told in April, but yet it is not on the website. So I don't know if we could also be able to get any information on that. Thank you.
Well, Governor, Nanoye Ankra, Asasi Radio again. Governor, do you have a window of when we are going to receive the IMF money, and do you anticipate any impact of it on the reserves and, by extension, the local currency? Thank you.
Kingsley, let me just say this before you continue. I was going to take 4, but I'll give you the opportunity to do the last one for this round of questions. Okay, the microphones are prompting you that there's time for everything. Okay, so let's just take this last one, and then we will deal with residual questions in other engagement with the other heads of department. Thank you. So, Kingsley.
Are we done?
Yes, please, Governor.
Okay, thank you very much. So if I can take the last one first, recapitalization of the banks. Yes, indeed, the DDP as well as other factors have impacted on a number of banks, as you are aware. So far, progress is being made in that regard. We are looking at end of latest by of this year, by December 2025, the recapitalization program should have gone far. Government is doing for the government institutions, doing a lot of to recapitalize. We think that with private discussions on the recapitalization program are ongoing. Progress is being made by the various parties. We are sure that by December of this year, most of the banks would have recapitalized. Then the the question before that was about the IMF money. As you are aware, these monies are released after the IMF board. We expect the next board to be held somewhere early July, somewhere thereabout. We are expecting about 360 million or so. And not that alone. The World Bank also stands to release, to make some disbursements. And so those monies will come in, and certainly they will build our reserves further. But that will be somewhere early part of June. Now, someone asked about our financial statements as to how early we are going to publish this. I'm sure by next week you'll see it on our website. It is ready. We are having internal meetings to conclude. And so rest assured, early part of next week, the financial statements will be released. Now, Islamic finance, and I'm happy you are asking. As we announced at the start of MPC, Professor Gachi is purposely here to help drive this introduction. I must say that we have internal capacity. We have some people who know what it is and what to do. However, we need a few steps. The head of banking supervision is here. He's somebody who has been, has gone through a lot of programs. He's very much comfortable with it. The current banking law, which is Act 930, which we passed in 2016, we provided for it. However, there were some lapses. For example, the establishment of the Sharia supervisory boards and the likes. Those were not captured in Act 930. So, Professor Gachi and his team will be doing some work in that regard to ensure that we are able to operationalize, Islamic finance, especially Islamic banking. Remember, it goes beyond just Islamic banking. There's also the other aspects of financing involved. So we are working on it. Hopefully very soon, when we are ready, we can consider licenses to establish an Islamic bank. Then there was the question about the SG sale, the Societe Generale sale. Yes, at the last MPC, I remember, I made a point that the sale was on. The sale is still on as far as we are concerned. As you know, as a central bank, we are not parties of the sale. Ours is to ensure that there's due diligence, that the parties that agree on the sale meet our requirements. And so we are just waiting. When the parties to the sale reach an agreement, they'll write to us. And we'll do the necessary due diligence. We'll check everything we need to check and then issue our no objection. So that exercise is still on. We haven't heard anything since the last MPC when we touched on this. I believe this is the last one in this part. And let me also emphasize that the press briefing that we do, it's in various stages. As you know, after we close, the HODs, the heads of departments are here. Bernard is here. The various heads of departments are here. If you need further insights, they are ready to sit down with you and to fill you in. Apart from that, all the other outreach that Bernard and his team have been holding across the country, that's also helpful. You can always ask your questions, or you can file them in, send them in anytime. We'll work on it and get back to you. Thank you.
Thank you very much, Governor, Dr. Johnson Pandit Isiama. And as we heard from his closing remarks, this is just the start of the conversation, but rather the end of the press briefing for the 124th MPC meetings. Thank you once again, Governor, and all those present here, and thank you for those who joined us online. And for the media, we expect you to go out there and give it the best shot that you can. No spin. Just go straight to the press statement, exactly what it says. and you shouldn't be, overly concentrated on trying to solve economic problems with neat equations. It doesn't work. That's why Governor keeps saying, barring any further conditions. So please, thank you very much for coming, and we hope to see you again at the next MPC meeting, the date of which is advertised in your media pack. So we'll just rise for the governor and the members of the MPC to leave, and we will continue our conversation here. Thank you. Advisors, you may also join them. Thank you very much.